Welcome back. The UAE's financial markets are closed today. Trading will resume on Sunday, but let's now take a look at the various currencies, followed by the price of oil and commodities. US stocks ended their worst quarter since the depths of the 2008 credit crisis, crippled by Europe's debt debacle, a US credit downgrade and a sputtering global economy. Wall Street dropped 2.5% on Friday as data out of China suggests the global economy is slowing. For the July to September period, the Dow lost 12.1%, the S&P 500 lost 14.3%, and the Nasdaq lost 12.9%. Meanwhile, stock markets in Europe wrapped up their worst quarterly loss since the collapse of Lehman Brothers 3 years ago. Based on the latest available data, the Dow Jones Industrial Average was down 2.16% at 10,913. The S&P 500 index was down 2.5% at 1,131, and the Nasdaq Composite Index was down at 2.63% at 2,415. Papandreou has said Greece was committed to implementing austerity measures in return of European aid after meeting with French President Nicolas Sarkozy on Friday. Papandreou added the Greek government would welcome international observers, pledging full transparency in Greece's debt-cutting efforts. Following the meeting, Sarkozy said that he had been reassured by the Greek leader that Athens would deliver on its commitments in return for European aid. Sarkozy added he will meet with German Chancellor Angela Merkel in the coming days in Germany to discuss Greece's debt troubles, calling support of Greece a moral obligation for Europe.
I want to make it very clear that Greece is determined. I myself, our government, Greek people are determined to make the necessary changes. We are making the sacrifices and we will live up to our part of the decisions we've taken, our responsibilities, making all the necessary reforms. First of all, because we want to change Greece and make Greece a competitive, socially just and transparent country.
The London Metal Exchange is the world's largest metal market, and it's attracted the interest of the Singapore Exchange and the London Stock Exchange, who are tying up to make a joint bid for the LME. The deal could be worth £1 billion. Speaking to Reuters, the LME's CEO, Martin Abbott, said that there is plenty of interest from potential suitors. However, the SGX and the LSE declined to comment. SGX's stock fell by about 1% on the news, while shares in the LSE were down by 3.5%. They both tried and failed to merge with other exchanges earlier this year, when there was a flurry of consolidation in the industry, as exchanges are losing market share to alternative trading venues.
We intend to call for detailed bids, probably starting that process in December. We'd expect to see some serious numbers in the first quarter of next year. We haven't put ourselves up for sale. There's no need for us to sell, but we are available to be persuaded that there's a powerful reason that someone else should buy us.
And Japan is boosting its currency intervention fund in yet another effort to tame the yen. Japan's finance minister said Friday the government would authorize a further 15 trillion yen, or $200 billion, for forex market interventions. The move will mean a 50% increase in the intervention fund's capacity. The finance minister also said Tokyo will continue monitoring currency traders' daily positions for 2 more months to discourage speculative bets on the yen's rise. The announcement comes in the face of growing evidence that the yen's strength is stalling the nation's post-quake recovery. Data released Friday morning showed Japan's industrial output inched up 0.8% in August, much less than expected. Up next, we have the day's sports news for you, so stay with us.